And so you got to get real with yourself. You just got to ask yourself, what do you want out of life? Like, take money away for a second and just ask yourself, what's my ultimate end goal? But I think a lot of individuals fall victim to that, and it just eats them into their finances, and they never create that separation. So income and expenses just keep going like this. They look like they're living a great lifestyle, but they never can build wealth. And eventually that income stops and they kind of fall down.
Welcome back to another episode of the Anomalous Investor. Today we have a very special guest, Brennan Schlagbaum, and he is a CPA who became a millionaire, who retired his 9-to-5, and is an expert on budgeting. And he's going to pretty much tell us his secrets today so that we can hopefully walk in his steps and duplicate his success. Brennan, welcome to the show, and thank you for being here.
Thanks, David. Thanks for having me, man. And I wish I had more secrets, but I'll share what I can.
I'm sure they're enough. They're effective. So when we are just looking to get control of like our, but I know you have like your steps and stuff like that, but for a lot of people that feels like they're spiraling right now, we have record inflation and stuff like that. How are we going to get on track and get control of our budget?
Yes, absolutely. Good question. So I think the first thing is thinking of it in systemizing or systematically, right? So most individuals are thinking budget is restrictive, and they're thinking just one little document, some Excel, table that they're going to pull up, and it's just going to seem like, hell to them. And the reality is it's not. And so if you have a system that works, and I'm talking budget, balance sheet, and amortization schedules, all three documents cohesively working together, you're going to be really effective because you're going to know where everything's going. You're going to know your starting point, which is your balance sheet and your net worth. And then your budget shows your cash flow, and you're going to be able to work between those two documents. And then let's say you have some debts, your amortization schedules are going to basically be a debt payoff plan for you. And you're going to know every single step of the game to effectively, hit your numbers every single month. And when most people I talk to, are struggling with budgeting, it's because they don't do it. Like, that's all it comes down to. They just simply don't do it. They do it in their head. They write it on a piece of paper. They just do fixed expenses is a very common one. You have to include everything. You have to be real with yourself. And one quick tip I could provide anybody listening to this is go look at your last 3 months of bank statements and
Right.
actually like write everything out and see what actually happened. Most will draw the conclusion that this last 3 different months was different. You know, things like that don't typically happen. But why is that a consistent trend? Is because we just, as people, we forget, the bad really quick, and we try to focus on the good. And when you have those things keep popping up month after month after month, it's really impacting your financials, but you don't want to usually draw attention to it. So you try to like throw it in the back burner or whatever and forget about it. But that, let's say, for example, a trip to Chicago for the weekend, or a short trip to Nashville. Those things actually happen every 3 months or every, couple months, and you just want to forget about them. And if you just are real with yourself, hold the mirror up to yourself, you're going to be really effective, and you're going to come to the conclusion once you look inward.
Yeah, I'm actually guilty of that. And you put all your fixed expenses and start making excuses for that one time you went out and stuff like that. So I
Yep.
completely understand that. So when you get control of like your budget and you are saying, okay, I want to set aside for like saving, because I know you've done this as well. Are you looking to make cuts, or are you increasing income? Are you making like those adjustments? How are you coming up to with your numbers for savings?
Yeah, I think all of the above. Like, I think when you're looking to save money, like my goal is to save money for the cash for emergency fund, basic bills, the sinking funds that you might include in your budget. Once that's done, like, I don't save any money. In fact, I don't save any money, technically speaking. I save the money, but I invest all of that money. So I save to invest versus saving cash to save cash. So once you hit your maintenance level of cash required, everything else should go to investments. Now, as far as how do you figure that out, and what do you increase income? Do you subtract expenses? I think you always start with the end in mind. You figure out where you're trying to get to. Let's say that's early retirement at 50 years old. How much money would that take on a monthly basis to achieve? If that's doable with what your current income versus expenses are, go for it. Set that automation up, but automate that process so that you can get there, because it's not a decision every single month. That would be step number one. Step number two is be efficient and adjust your budget to a value-based budget. I'm very big on that. So, cutting expenses are great. I think, if they're useless, go ahead and cut them. Late night Amazon purchases and things like that, it's probably not much value to your life. However, don't just cut like your family time or your health supplements or whatever that actually bring true value to your picture. So I don't cut expenses like Dave Ramsey style and beans and rice it. I'm really focused on what brings value to me, align my spend with exactly that. And then on the income side of things, making sure if your income's not where it needs to be, there's so many different skills that you can, in today's world through just YouTube University itself, learn on the fly basically and get a pretty good understanding and make extra income, especially with the internet, man. There's so many opportunities out there to make extra income and people are just sleeping on this opportunity. I think we have the most opportunity in ever, like literally ever. And I think we had the laziest, and that's not like a boomer take or like, these kids nowadays, I'm not trying to be like that, but I do think we have just a lazier generation than ever before with the most opportunity. And I think if people just wake up to realize what the opportunity is in front of them, they're going to be amazed at what they can do from an income perspective by increasing that.
Absolutely, absolutely, and I do believe we have tremendous opportunity out here because I'm a witness to just buckling down for a few years and how that can dramatically change the trajectory of your life. So I agree with
Absolutely.
that completely.
I've seen it firsthand with my business as well. I mean, I started this as a hobby just to help people and just have fun talking about it, and it turned into a full-on business.
Absolutely, and segueing into that because I saw that you made some significant strides like before 30, and even hitting some milestones that people like dream about. How did you bring that into fruition like at such a young age? And how can someone, let's say they're 18, 19 and are looking to make that transition, how can they follow in your steps?
Yeah, I think first things first, you need a financial plan. So you need to know like the actual numbers. So based on what we were talking about in the beginning, like having the balance sheet, having the budget, having the amortization schedules, mapping everything out, projecting, different investments and stuff like that to see where you're going to be at X number or X date or whatever. From there, it's a huge mindset shift. It really is, because when you put those things on paper, a lot of times things become more realistic than you thought they once were, because it was all a dream, right? And now you see it on paper, which is why all my students pay off so much debt so fast, and why we did ourselves as well, because we saw the ability to pay it off, and that triggers the mind to saying, wow, like there's an opportunity here. I actually have the ability to do this, and that belief that changes internally, because a lot of people have this belief system: I can't do it, I'm not smart enough, I'm not, rich enough, I don't come from a family that does this stuff. All these false beliefs they're just telling themselves, and they've held themselves back for years. Once they get past that initial mindset of like, hey, I can actually do this, which comes with having a financial plan, all of a sudden your mind opens and opportunity becomes galore.
Mm.
When you lean into that, you're going to find ways to do things a lot faster than you expect. And that's exactly what happened with us. We didn't come from a place of money. I didn't grow up, loaded with money. My parents didn't give me any money after 16 years old, basically. Once I got a car, I was pretty much out of the house. And I jokingly, there was an article about me on Business Insider, and there was comments like, hey, he must have got $1 million from his parents. And I called my parents, and this is actually content you can see on my Instagram. And I just called them very cold, like no one knew. My parents didn't know this ahead of time. And my mom's reaction and my dad's reaction were hilarious. So if anybody's not seen that, go to my Instagram and check that out. But the reality is, like, anybody from any situation can make this stuff work. Surround yourself with the right people. Put yourself in circles and groups that are going to take you to that next level, and people that are already doing that stuff.
Absolutely. And I was going to ask, so if someone is, let's say, late to the game, like they're, let's say they feel like they're late. Let's say they're like 40 and like, okay, well, I haven't been very structured. I'm hoping to retire very soon. Would they take a similar approach, or would you have them on something like much more aggressive, or is it kind of like the same approach would get them to the finish line?
So that's a good question. I think it's the same approach. Your numbers at 40 might look at somebody at 25 a lot differently. Like you might have to be more aggressive in cutting, which does not sound fun, but it depends what you're trying to achieve, right? So again, always start with the end in mind, kind of work backwards and figure out what your needs are from a cash flow perspective for like investments or debt payoff or, savings or whatever that is. Figure out, hey, in my situation, Do I have that? If you're 40, you want to retire at 65, you still have 25 years. That's a long time. You're probably going to be fine. If you are 40 and you want to retire at 50, well, we have 10 years. So our timeline has shrunk. The compound interest window has shrunk. So we have to probably be more aggressive from the cash flow management side of things. And that's always a challenge, obviously. So it just kind of depends what the individual's goals are. Age is somewhat relevant for sure, because most people's goals are somewhat in the same, range. Like I want to retire early and stuff like that. I want to pay off debt. So it's going to depend what your numbers are, how long that window of opportunity is, and then just adjust and plan accordingly. But it's not to say anybody's too late to the game ever.
Okay, absolutely. Um, and outside of like getting your finances in order and getting an idea of where you are, what about the growing, the investing? Because I saw that you did some indexes.
Mhm.
What are some things that people can kind of look into to grow?
Yeah, so I think the best investment out there is index funds and ETFs. So those are things I hold near and dear to my heart. I talk about all the time. Now they come with risk. Like I think there's a lot of people on the internet saying, the risky things are like the tradings, the forex, the crypto. That's just like a gamble half the time. Um, the investment game still comes with risk. Any investment that you have has a risk, and I think a lot of financial planning is all comes down to risk management. How much risk are you willing to take on? So S&P 500 is a very common index that people talk about. It's fine, but if you're 100% S&P and the recession hits and you lose 30%, you have to be prepared for that. So as long as you're willing to take that loss temporarily, unrealized, and ride the wave with that S&P 500 fund, or adding international into the mix, adding bonds, adding real estate investment trusts like REITs into the mix, adding maybe commodities depending on your investment style, but bringing all asset classes together, and even further than that, obviously getting to the point of maybe we're going to diversify into different exposure within equities, right? Equity exposure into sectors or geographical regions. Same goes for bonds and real estate and all that kind of stuff. So, you can go multiple different layers. I have a really good YouTube video on portfolio allocation, if anybody's wondering, of like just breaking apart your portfolio for your specific situation. Risk profile, taking portfolio allocation quizzes with, Charles Schwab has one, JP Morgan has one, Vanguard has one, understanding where you're at from a risk meter perspective. And, I think most people probably know where they're at, to be honest. Like a lot of people treat investments as this like separate game, but I always say like, as a person, how, let's say you're put on the spot and at work, right? Your boss calls you out. How do you respond in that situation? Let's say you're put in some uncomfortable position. Somebody breaks into your house, like real life stuff. Like,
Right.
how do you react to those things? And most people can get to a pretty good feel of like, yeah, I'm pretty risk averse, or I'm risk neutral, whatever. Or man, I like to take a ton of risk. And so there are different personalities out there, and I think aligning your portfolio with that is super important, because longevity is the name of the game. So consistent dollar cost averaging into these things for 10, 20, 30 years. And if you want to stay consistent and ride that wave, you have to understand how big is that wave that you're taking on.
Absolutely. And off of your comment of riding the wave, because as I make a lot of investing and do tutorials like on TA and stuff like that, videos, what I commonly see, I want your opinion on this, is when we say, okay, typically the market engineers up. If you invest over time, typically you'll kind of average in and you'll be fine. But it seems that when you have times like of uncertainty and like a recession, this could potentially get worse. People will say, oh, well, I can just wait and get a better price. And, pretty much trying to time the dip here. What are your thoughts on that?
Yeah, it makes me smile because I have so many statistics I could drop right now. But I actually did a whole entire index fund like YouTube video on like why like that's just a really bad approach. Of course, like in the most ideal scenario, everybody would wait till it hits the bottom and everybody would sell when it hits the top. If everybody knew, like if it was that easy, everybody would do it. But there's a reason that it's just not like that, right? So prime example, the Fed keeps adjusting the interest rates, and everyone's sitting there waiting for earnings reports and all these different types of things investors are looking for. And they're like, what, if the Fed come out and say they're not going to increase by 75 basis points and instead 25 basis points, the market's going to go up. And they do so, and all of a sudden the market goes down. You're like, wait, what? Like that wasn't expected. There's so much irrationality in the short term in the market that you just can't predict. You can look at a lot of different things and use a lot of history to kind of project what you expect to happen. But the reality is we're right probably at 50-50, and it's kind of a hit or miss. The other thing is the cash drag. If you keep too much cash held back and you're waiting for that right time and the market keeps going up, you're just missing the entirety of the market upswing. And I'll go back to 2018. So when I was in 2018 my uncle was very, very bearish on America, very bearish. And I so were a lot of institutional investors at that point in time. They were big on international projecting. And what we've seen from 2018 to, let's say, to today's world, was complete opposite, in fact. And over the next decade, a lot of people are projecting international to take back over versus domestic. And so we'll see if that's the case. A lot of times these big vanguards of the world come out, they'll say one way or the other. And the reality is they're never right to at least the percentages that they're sharing. They have a lot of smart people. There's a lot of smart people in this world, but nobody knows the future at the end of the day.
Absolutely. Yeah. And I just really trying to get some information here because it's just so common for people to try and say, okay, I'm going to time it. And I was like, well, if you could time it, then, you'd be a trillionaire already. So
It'd be really easy. Warren Buffett wouldn't be Warren Buffett, and Wall Street wouldn't be Wall Street.
right. Yeah, the casinos don't stay open just by paying out, right?
Yeah, exactly, man. Like I wish I could time it. I wish I was that. And it's not even about being smart. Like honestly, like I think a lot of people are like, oh, that guy on the internet's so smart. He knows what he's talking about with his stock picks. It's like there was this guy, side story real fast is there was this guy on Wall Street. They interviewed him on Wall Street, huge hedge fund manager. And they were talking about different sectors and stuff, floating in and out of different sectors. What do you think's the next big company? He was naming all these companies. He sounded brilliant. And then they asked him, what does that company do? And he couldn't tell them. He literally blanked out on the camera. He's like, I don't know. And it's like, okay, if he is just going with the flow of like maybe charting or whatever, but he doesn't even know the fundamental analysis of these various different companies he's talking about. But he sounds like such a smart, talking head. And most times on camera, they're not going to like reveal that type of information. They're going to go to a commercial or whatnot. But they put this dude on the spot. And, a lot of people I'm sure were following him, and I'm not going to name names or anything like that. But the reality is like, even that guy that sounds brilliant probably doesn't know everything. We're all human. We all have a limited amount of information at the end of the day. And there's so many factors that play into like the way the stock market goes, which companies go up and down for different reasons.
Absolutely. I agree with that completely. We're all looking through a glass half full.
Exactly.
So I noticed that on your Twitter account that you listed out your 7 steps to pretty much being, I think it was 7 or 9 steps, if I'm not mistaken, to be successful and kind of get to the end goal. We talked about a few of them. Are we missing anything that you would consider crucial to taking control of your finances and growing?
Yeah, so I think so we talked about budgeting, we talked about paying off debt, we talked about increasing income. I think no FOMO investing is a big piece of this. So people get caught up in trends that, the crypto trend. And now I think right now, current days, the AI trend and stuff like that. I'm very bullish on crypto. I really am. I keep a very small percentage of my portfolio. I understand the risk it comes with from an investment perspective. Usually 1 to 5% of net, investable assets is kind of what I typically range within. I think I'm at 1% right now. So not a whole lot there, even though I do believe in it, right? I do believe in AI. I think there's a big use case. I think it's pretty obvious, but it doesn't mean I'm going to go chase the next AI ETF and see the next ARC happen. The huge rise with the retail influx, and then, it kind of falls off the map. Saving 20% of your income would be another thing we didn't really talk about. 20 cents on every dollar. If you don't want to do anything I've talked about today, like you don't want to budget, you don't want to do all this kind of things, just at least have an automation to save 20%. Like take 20% of your paycheck and go invest in your future. Live on the other 80%. You're good to go. You'll be decent. If you want to do that, that's fine. Automation, we've kind of talked about a little bit, but like automation, really, people sleep on automation. I don't think people realize how important this is, because we're not consistent as human beings naturally. And you can build a consistent wealth building tool into your finances, whether it be like IRA, 401k, taxable brokerage with automation. And so I highly recommend for people to do that. Something we didn't talk about at all was falling victim to lifestyle creep. So,
Mm,
one thing I'm very, very, my message is very clear on this is like when we were 23, we bought our lifestyle at that point in time, right? That was the lifestyle we were comfortable with, right? Every time we've increased our income from 23 to 31, we didn't really move we briefly went up in lifestyle creep recently with the move to Texas for my daughter for obviously, medical reasons. But like other than that, man, we haven't changed our lifestyle one bit. And there's not to say you can't, like you can increase your lifestyle. I think that's reasonable. Just don't go at the same pace as your income and don't fall victim
mm,
to that when your neighbor gets the new car or the new home. They don't care what car you're driving or what house you're in. At the end of the day, they're busy with their own world, their own problems. But I think a lot of individuals fall victim to that, and it just eats them into their finances, and they never create that separation. So income and expenses just keep going like this. They look like they're living a great lifestyle, but they never can build wealth, and eventually that income stops and they kind of fall down. So victim to lifestyle creep is huge. And I think the other thing is consistency. Like I said, human natures aren't consistent. Building in systems automation, kind of with everything wrapped in, budgeting, investments, and all that kind of stuff, building that in to create that consistency naturally is super smart. And it's just very basic. It's a very practical tip, but I know it will work. Like it's guaranteed to work.
absolutely. And I'll ask you one more question because I know that the delayed gratification, like the lifestyle creep, is very big. So, in your opinion, because I know people say, okay, we're about to sacrifice. How long am I making the sacrifice for? When can I, get my, my dessert, my pleasure? Like, what is like? So, if you're advising someone and they're saying, okay, well, I'm making more money now. I'm hitting my milestones. At what point can I go out and get my new car or my boat or discretionary income on stuff? At what point
Yeah,
would you
that's
advise that?
fantastic. So everyone I work with is a little different, right? So like, there's someone person A's discipline's a lot different than person B, and their desires and what their goals are going to be different than person B as well. So when I assess and talk with somebody, I really get a good feel of just like having a general conversation, getting to see what are those pain points, what are those triggers that are making them do X, Y, and Z. And so I don't think there's anything wrong with getting a nice car, anything wrong with doing all these things. I think it's in fact part of life. And eventually you can get to that point if you put the work in, right? But we see so many people using credit and just doing all sorts of dumb things when it comes to like cars and houses and stuff, and it puts them in a bind. And so you got to get real with yourself. You just got to ask yourself, what do you want out of life? Like take money away for a second and just ask yourself, what's my ultimate end goal? What am I really trying to accomplish? Most times though, I think most times people would draw the conclusion like the car or the house like isn't as big of a motivation. It's kind of a secondary motivator, but it doesn't really motivate them. Pride might motivate, family might motivate, those deeper internal things or driving, maybe ego, things
Right.
that are actually moving the needle. And then they cover it up with a car. Like, hey, my ego is going to be hurt if I don't drive a nicer car than my neighbor, or, I'm pulling up as a real estate agent and I'm driving a Toyota, but the next guy's driving that Range Rover.
Mm.
I don't feel as qualified to sell this house as that other guy. And so a lot of times it's actually like deep rooted stuff. And most people aren't willing to go that deep, and it's very vulnerable. But again, there's nothing wrong inherently with a car or house and stuff. Like go do that. Go buy whatever you want to do if it's for the right reasons.
I'm really glad you said that because when I think about that, what I think about is status. So I'm really glad you touched on that. So, well, Brennan, I thank you for coming on. I really appreciate your time tonight. Could you tell us, like, for like the viewers, how could they get in contact with you, like your social media handles and stuff?
Yeah, absolutely, man. So you guys can find me on any social media. It's at Budget Dog. You can find me on Instagram, Twitter, TikTok, YouTube, Facebook. I think I'm on Pinterest now.
Okay.
I'm pretty much every platform, but at Budget Dog. Twitter and TikTok is Budget Dog _. And when you follow me on Instagram, you're gonna get a lot of fake accounts following you back. So beware. I have one account.
Absolutely. Awesome. Well, definitely thank you for coming on, and we will certainly have you back on a couple of different other topics. So just appreciate you for stopping by and just literally providing a bunch of value for us.
Awesome, man. I appreciate you having me as well. Thank you.